mean, if everyone went to the bank and said, I want cash, I just don't want this, digital representation, there'd be a bank run and it'd be game over. And that's kind of coming back to your first question about, when does the manipulation end? And that's sort of when it ends, is when there's enough physical demand that can't be met.
This week's specials with Miles Franklin Precious Metal Investments. Austrian Philharmonics for only $365 over spot. Type 2 Silver American Eagles for only $725 over spot. And limited mintage San Francisco Mint Type 2 Silver American Eagles for only $725 over spot, sold in quantities of 500. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today, our good friend David Morgan, one of the top silver expert and the host of the MorganReport.com. David, thank you so much for joining us today.
Thank you, Elijah. It's good to be back with you. Thanks.
Definitely. It's great to be back with you. And I know last time we had you on, you were talking about how, in your opinion, silver manipulation is ending. What are some of the updates since the last time we talked that are convincing you of this?
Well, I'm not sure that's what I said. I mean, I've been saying for years that, the manipulation will end. The cues that we are seeing that we're closer to that, what I think is an inevitability, is one, the rhetoric from the exchange, which we've heard for years. Two, the fact that there's been more legal work that has gone to fruition on the manipulation. I mean, for years we've had these cases and they're thrown out. Basically, a lot of people are thrown out kind of arbitrarily. I don't agree with the court, but what they have said is that they didn't say there's nothing here. What they said was there's not enough here for us to go further. I would argue that's not true, but we have now where we are, it's gone through. People are getting prosecuted for spoofing, manipulation. Let's just call it manipulation because that's what it is. So that is another cue or clue that we are getting closer. Another one, of course, is the primary one that kind of rules out all others, and that's what is the physical silver supply doing on the main exchange that sets the price to COMEX? And the answer to that is it's gone from roughly round numbers 150 million ounces to about 100 million ounces. But I have seen the registered category down as low as 35 million ounces before, a few times during this last decade. And it's never sparked it sparked a rally, but it's never sparked, a failure or whatever. The last thing is, the dynamics of buying and selling, supply and demand, with the new awareness of silver as the commodity that it is, with so many attributes and a monetary position similar to gold, with the Wall Street silver and others waking up and inflation being frontline news in a lot of places, there'll just be more and more demand. So I call it like a natural corner, you could call it, a squeeze, you could call it, cornering a market. And it has been referred to in the past as a natural corner. What's a natural corner? Well, it's very much what happened in palladium. It wasn't like there was a group that said, I'm buying a bunch of palladium and driving up the price. The demand was so strong for the auto catalytic converter sector that it drove the price from, I forget, roughly, I think it sold the first tranche at about 1,000 and started about 600. And it's gone up to 2,500 and it's leveled off there for months. And I've seen it's come off some, but it's found its equilibrium because of physical demand. Silver will do the same thing. The deal with silver is that since it is a monetary metal, the best inflation hedge, everyone on the net, it's super cheap. It's pretty available in North America, not so much in other areas. The run to silver could be astronomical compared to what it was in the 1980s.
Now, that is one factor, that you do have the whole world at play right now in the silver market instead of really just the United States. Your perspective then on where you could see silver going if the manipulation does end?
That's impossible to know. I mean, I'll play the game and guess. Since we've been to 50 nominally, again, and 50 was the intraday high in 1980. I mean, if you inflation adjust that, you're looking at like $600. But if you just look at momentum and the way markets move, I've said 100 back in 2003. I think that's actually low now in paper terms, and it depends what's happened in the idea of the trust of money. If the 1 or 2% go to the exit and then more catch on, and everyone wants out of the dollar, which I think will happen at some point, then it's really hard to put a paper price on it. But for talking purposes, I think 150 maybe. It's really difficult to know. I mean, I had a friend that was a huge investor, client, and he was very close to the floor of the COMEX. And he'd have these great stories. I love talking to him. And I don't remember the gentleman's name, but it's years and years ago. And he came in, and he was a big chartist. And bottom line, I won't belabor it anymore, was he says, silver's going to $212 an ounce. So take a big, I'll say one more. Jerome Smith, the silver guru back in the 1970s, he wrote Silver Prophets in the 70s, which was supposedly read by the Hunts and got them interested in the silver market. He wrote Silver Prophets in the 80s, Coming Currency Crisis, The New Boom in Silver, the Reinstitution of Money, several others. I have most of them, if not all of them. And the guy that was his ghostwriter, Christopher Weber, that really wrote the reports, wrote one years ago. It's on the paid part of the website. How high could silver go? And he said 200. So, I say 100. I'm kind of the weakling of the group.
No, when it comes to owning physical silver, you recently did a couple interviews actually on this, and really expressing the importance of being able to hold it in your hand. And you really talked about the ownership theory of money. Could you explain this for our viewers?
Sure. It's, as most that follow your channel and others like ours, yours was mine, and there's the adage that they've heard very often: if you can't touch it, you don't own it. So that applies, and people get it in the physical precious metals world, but no one's really applied it to the fiat world, really. So this book, which again is Jerome Smith, Economic Research Counselors, The Reinstitution of Money, I dug it out. I hadn't read in a long time, and he talks about the ownership theory of money. And of course, there is like, if you can't touch it, you don't own it. So I did a thought experiment. This isn't out of the book; it's my own thinking, but it's like not very profound thinking. It's just, okay, well, let's just play that. So I did. So if you went to what the Austrians call true money supply, just M1, I mean physical cash, base money, M0. And you said how much, currencies out there versus how much obligations are out there. I forget the number, was like 5% or something, but 60% of that is overseas. And most of it's in $100 bills, not that we care. And then if you say, well, okay, so drop it from 5.5 to 2%, or excuse me, drop it from 5%, 60% overseas, so drop it to about 2% within the continental United States. Well, not 100% of that 2% is sitting in the bank. I'm guesstimating here, you can agree or disagree. I'd say at least half is out in the world. What does that mean? Restaurants, gas stations, bars, nightclubs, churches. There's all this cash. Now that cash goes from a place of business back into the bank, but it's a two-way street. At the same time, the trucks are bringing that paper back to the banking system. Cash is being spent every day at restaurant, theater, whatever. So my point is that what the banks actually would have on hand, if people went to their bank and said, I want cash instead of digits. So they're transferring digital fiction into physical reality, just like you do when you take your bank account down by $5,000 and buy silver coins, you're taking your bank account down from 5,000 units on a computer memory into 5,000 units of physical cash. So if that were to happen, of course, it's about a 100 to 1 cover ratio. I mean, if everyone went to the bank and said, I want cash, I just don't want this, digital representation, there'd be a bank run and it'd be game over. And that's kind of coming back to your first question about, when does the manipulation end? And that's sort of when it ends, is when there's enough physical demand that can't be met. And then going back to the palladium analogy, there could be, I'm not going to say it would be, there could be a point where, you reach equilibrium, everybody's happy at $150 silver. The problem with that, with silver versus palladium really isn't considered a monetary metal, and silver is by some. And I know we're going to talk about that last, but that it's got a lot more emotion tied to it. So there's people that will never sell it at any price. And so there's a lot more, let's say, I'll just use the word again, emotion tied around the silver market than there is platinum or palladium.
And is that kind of the key to the manipulation? And we'll put a link in the description of this video to get kind of all perspectives on the manipulation debate. It's highly debated whether it's happening, to what extent. But in your view, with respect to this, kind of how there's more units of currency right out in existence than just the dollar bills, is it kind of the same? Is that kind of the heart of how silver is manipulated? Is there's more silver traded than there is the physical metal?
Yeah, if it's supply and demand, and you can create infinite supply with the stroke of a computer keyboard, then you've got a lot of it, which means you can't really get the correct supply demand, numbers. So you're in a situation where you've got infinite supply, and of course that's a metaphor for how much paper silver can be created at whim. The problem is that there's only so much physical, and that problem's only come to the fore a couple of times, and that's been from January, February of this year, where you get these huge premiums on retail silver, happened in this financial crisis of 2008, where you really couldn't get silver, but the commercial bar market stayed steady. And that's the point that many people miss or fail to discuss. And so, all markets move at the margins. So if it was impossible to get commercial bars in a timely manner, now your game's on. And to my knowledge, it's only happened one time. And that was when the Sprott Physical Silver Trust was launched. And I think the amount was 22 million ounces of silver. And in that first tranche, the final commercial bars came in late and were freshly poured and stamped, which I don't think was illegal or anything, but it was very interesting that it was of such a demand at one time. 22 million ounces, a little more than I've got. But the point is that it was hard, and the price moved, from my memory, $2 or $3. I think it was a couple dollars anyway on that one thing. What was very interesting, because I think it's important, because otherwise you're going to get a bunch of trolls that are going to ping me, is the next time the Sprott PSLV made a big purchase was almost identical. I believe it was 24 million ounces. So I was licking my chops going, oh boy, here we go. We're going to force the issue, Nope. 24 million ounces. Here you go. It's all there. Not late. A market hardly moved. So it's a pretty big market. I mean, it depends what you compare it to. Compared to oil, it's just microscopically small compared to most of the commodities. If it was treated as like gold as money, in theory, it could be worth more than money. But, when I did that lecture series a few years back, what if silver were treated as like gold, and talked about whenever silver and gold were both money and money alone, that the ratio never got above 20 to 1 for 4,000 years. So it's obvious from history that the most valuable place for silver to be is as money. not as, something that conducts electricity in your cell phone.
Now, how does silver then differ from other commodities? Because other commodities are also traded at multiples the underlying physical. So how is silver different?
Slightly different. I mean, most of the commodities are, as you accurately said, multiples. Silver is just multiple times. So if you go to the cover ratio on oil, it's maybe 3 days to a week. Lumber, about the same. Cocoa, all those. But silver, you got like a 6-month supply on paper as an overhang. That's what's different.
And then that impacts the price in your view, because then there's this oversupply, which pushes the price down?
Yeah, it's supply and demand, and most of the trading is done on paper. So if you can create as much paper as you need, you've got a big supply. And if you've got a big supply of something, the price is low.
For our viewers, what is your perspective on how people should invest in silver then? How do they get out of that system that, in your view, is artificial?
Well, I mean, it's been going this way forever. I wouldn't say necessarily it's artificial. It's the way that the game is set up, or the commodities, the CME does it. The rule book's very clear. I mean, if you're going to play, in that realm, there's nothing that they're doing that isn't in the rule book. I mean, like, for example, I don't want to make a big deal. I mean, and of course, the silver bulls like me will get excited by it, maybe. But I had a few people that are very, relatively close to me send me their correspondence with the CME. And they said, I want to stand for delivery. And I got a check instead. But these are, onesie twosies. I'm not, anyone could afford 5,000 ounces of silver. It's hardly poor. But, they want the silver. No, they get a check. Now, does that mean they're out of silver? No, I would say, and I'm trying to be objective here, and I don't care if people get mad. I'm just giving you my, thoughts, and I've thought it through, I think, well. It's kind of a hassle to, package up 5,000 ounces, whereas a bank or a PSLV type of purchase, they're going to make that. Of course, they didn't, then you got a technical default, not a legal default, because it's in the rule book. We could settle in cash for you too, Sprott, PSLV trust. But so that's happened a few times. I haven't got like hundreds and thousands of these things. I've said a few of them, but you can't complain. I mean, you say, well, I want delivery, and they'll read the rule book. We can settle with you in cash, and we just did. So what's the problem? So I answer your question. I might have sidetracked myself. What was the question?
No, it's all good. And I guess to get kind of back to the original idea of this ownership theory of money, you need to have it in your own possession, it seems like, to actually really own it. So like you mentioned currency, how there's multiples out there for every, cash dollar in existence. And if you just have money in the bank, well, maybe you won't be able to get it if there's a bank run. And the same is for silver then. So like, how do people protect themselves against that sort of bank run on currency or silver?
It's very simple. The answer is buy physical. And, like when, Max Kaiser started at, buy silver, take down JP Morgan. I mean, in theory, for every ounce you buy, if it's 100-to-1 leverage, it's not that high right now, by the way, but let's just use that as an example. Most people are familiar with that number. I think Jeff Christian even used that number once, that for every ounce you're taking, you're deleveraging 100-to-1. So every ounce is taking the paper market off, but not all of it goes through the paper, doesn't go through the COMEX. I mean, what most people don't know or understand is how much there is in what's called the OTC market, the over-the-counter market, and that's unregulated. So there could be 10 times as much paper silver on the OTC market that there is on the COMEX. Now, I don't think it's that big, but I do think it's pretty big. I mean, a lot of the, let's say silver leases or whatever, they have very little to do with the COMEX other than a hedge. Those are things that are done between, let's say, it could be between a bank that owns silver and a large jewelry producer, and there's a lease contract, and the only way that that's hedged is in the futures market, but it's between two parties. It's an over-counter derivative that's between a bank, and it has nothing to do with the COMEX really, and it might not even be hedged by the COMEX, although probably would be.
In your perspective then, because you can hold physical metal or you can have it in storage as well. So your perspective on that, kind of the positives and negatives of both.
I store metal. I mean, I've got enough to where I don't want it all here. And I don't want my, half my life savings to disappear. So you just got to be careful. I mean, the problem with the storage industry is I want to be very careful here, but you first of all, read the contract. If you're satisfied with the contract, then store wherever you wish. If you're not willing to read the contract, you better, it's a good idea to have someone read it for you. An issue for me is that there's intermediaries. So XYZ company stores bullion with Brinks or one of the other carriers, Loomis or Garda or ones. So that's all well and good, but what they don't realize is when they say, I want my silver delivered, is that they call XYZ company and say, I want my silver delivered. They've got to pick up the phone and call Loomis. So you got a middleman in there, where from my perspective, you're better off calling up the company direct. There's no one in between that well, give me my metal. Well, sure, of course we will. Let me get on the phone, And they don't really make that a very well-known fact. I mean, they're very honest about it. I don't want to get a lot of my friends upset, but like I said, read the contract and know who you're dealing with. If you're dealing with XYZ and it's stored at one of the major carriers, then it's there. And then a big, let's say, silver squeeze or silver run, you might have issues if everybody's jumping one way or the other, getting through on the phone or getting whatever. The other part is, how much liquidity do some of these people have? They might have sold, I don't know, let's make up a number, 100 million ounces of silver. But if the market wanted to cash in 100 million ounces of silver, would they have enough fiat to write a check for that many ounces of silver? And the answer is, of course not. There's very few that you could deal with at that kind of a level that would be able to cover it. Of course, in most cases, that'd be a bank directly.
All right. Well, David Morgan, we really appreciate your time today. Before we let you go, did you want to share with the viewers where people can find you online and any last thoughts you'd like to add?
Yeah, well, thank you for that. Yeah, I just encourage people to go to themorganreport.com and get on the landing page there. You can you sign up for our free newsletter. I do a weekly perspective. It's a weekly update on the metals. And once you're on, if you go up to the top of the landing page, there's a icon for LinkedIn and Twitter and YouTube. If you go to the YouTube channel, you will see like my latest interviews like this one. But if at the very top under where it says the Morgan Report, in the middle it says community. If you click the community bar, these are videos that I think are very pertinent to our economic times, and they're by other people. And about every third one gets taken off because it's controversial enough for the censorship parade to go in and censor it. I think we're all aware of what I'm talking about, but some do stand. For example, one that I posted a week ago, I said it's a good overview, especially for new people. Universal basic income as discussed, along with socialism versus capitalism. So if you got some time or want to educate yourself, I want to point that out. So you triggered me when you asked, what else would I like to say? So if you go to my YouTube channel and you're tired of listening to me, I say the same thing over and over, and I get it. Go to the community bar, open that up, and look at what I have vetted for you to help your, let's say, economic education. And I think you might be pleased. So that's it.
Fantastic. Well, we never tire of hearing from you, David. You're one of our most valued guests here on our channel. We get probably some of the most views from the interviews that we do. So we really appreciate your time today and always.
Well, thanks so much. Appreciate it.
This week's specials with Miles Franklin Precious Metal Investments. Austrian Philharmonics for only $365 over spot. Type 2 Silver American Eagles for only $7.25 over spot. And limited mintage San Francisco Mint Type 2 Silver American Eagles for only $7.25 over spot, sold in quantities of 500. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237.